Not all, but a portion of penny stocks have benefited and survived on the largesse of retail investors for far too long. You see these companies bleeding cash for extremely long periods and dribbling out either acquisition rumors or rumors of partnerships that keep some people buying shares. You can see it in the balance sheets, huge deficits instead of retained earnings, but still positive book value because there's always fresh new cash on the balance sheet from selling new shares on OTC markets. If you think about a company like Microvision, its value can be thought of as that of a deep out of the money call option, with the strike price equal to either the company's debt or its liquidation preference of any preferred stock. So buying a stock like MVIS is like buying a deep out of the money call option at in the money prices. This study on OTC market structure had some interesting conclusions. First, they alluded to the opaque, difficult nature of the market. But here are the two main points. They found that all else equal, a diversified portfolio of OTC pink sheets yielded a lower return and higher risk than a portfolio from larger exchanges. This suggests that you should invest in the largest pink sheet companies, the largest of the small. That's if you're creating diversified portfolios. I realize that many people use their kind of fun money that they set aside to take on more risk with OTC stocks. This is important because all the studies, and these happen to exclude the OTC pink sheet markets, actually demonstrate a size premium. Smaller companies are riskier and require higher rates of return to entice investors. Returning to this issue of using real option theory to value stocks, I think it makes sense that some OTC stocks have similar risk and return profiles to crypto assets. By the way, it was me that added the crypto assets to this security market line, not too far from where you'd find the pink sheets. I was thinking about Cardano, a blockchain company. I'm not sure Cardano is going to make it as a blockchain company. They might emerge as a staking company instead, much smaller than they initially envisioned. The Ethereum white paper predicts that, and here's a quote, "We predict that the set of applications for decentralized consensus would be too small to warrant their own blockchains." I understand that Cardano uses proof of staking and has been referred to as an Ethereum killer. I don't believe that. Ethereum is here to stay. Developers are already building on the Ethereum blockchain in very large numbers. It isn't just consumers adopting Ethereum in large numbers, the business side has too. The hugely influential audit and consulting industry is already entrenched in Ethereum. The Ethereum cottage industry is already here, built out, be it smart contract auditors or otherwise. Let me back up for a minute. When you think Ethereum, think smart contracts. That's what Ethereum is about. They're mostly written using a language called Solidity, though it's not absolutely required. Cardano has developed its own blockchain, but it's only just now finally releasing its smart contract capabilities. Also, Ethereum isn't the only blockchain with not only a head start, but that has already drawn developers and that you can see widespread adoption of. The Cardano blockchain is built to have scalability Ethereum doesn't, but this issue is also already being tackled with second layer rollups like Polygon, or others that host read-only data that doesn't write to the blockchain. And Ethereum will at some point, soon maybe, release Ethereum 2.0 that addresses these issues. And by the way, Cardano has made its blockchain compatible with the Ethereum blockchain as well. Plus, Ethereum can communicate with other blockchains even today. It just isn't a great idea for serious app development yet. I'm not saying that you can't make money on penny stock and other pink sheets. My point is more just that I don't think that I will transcend the finance. I'm sure I can find a few winners, and in fact I do try to exploit the small size effect. But over the long run, I expect myself to underperform in this, the stock market seller, because the additional risk chips away at returns over time. Anyways, that's just me. You may like pink sheet and penny stocks and maybe even are making a lot of money, and if you are, more power to you. Anyway, thanks for watching, and please remember to like the video and subscribe to the channel. Thank you.